If this is work, it sure doesn't feel like it. I'm sitting here in the Olive Garden, reading about interesting stuff, tinkering with my tools, talking to interesting people, without having to fly around the world in business lounges and hotels. Drinking coffee, doing these videos that I have so much fun making, which leads to meeting more interesting people and somehow making money also. It's almost too good, guys. I don't know what I've done to deserve this. Thank you everyone here for listening to my ramblings. Without you, this would have been much duller. My last video, comments. Dude, come on, you're playing it both ways. Might go up, might go down. Either way, told you so. I replied, bullish AF. Not clear enough? Any suggestions? Now, I'm joking here, and I'm not trying to make fun of anyone. On the contrary, I've always appreciated challenging comments, even when I was in telecom meetings with our customer executives. People think I'm worrying about the critics. No, I'm not. I'm using the critics to explain my point. It's a powerful tactic, because it's only by exploring the counterpoints, exploring the perspective of the critics, that you can truly get to the bottom of anything. Be it a technology, an investment, which country to live in, anything. So let's do just that now. Let's explore the counterpoint. Let's truly play it both ways. Might go up, might go down. Then where does that lead us? Let's start with this BlackRock interview from a couple of days ago. I'm sure you've seen it, but it's worth 100 replays.
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios.
Might be something here. BlackRock is the world's largest asset manager with $10 trillion in assets under management. Larry Fink is the chairman and CEO. And perhaps the world's largest asset manager has a point, that this isn't just some fun, nerdy toy, or worse, a scam or tool for criminals, like many people accuse the internet of being. I know because I was there. But it could also be that CTO Larsson, Larry Fink, and basically every large tech entrepreneur in the world are all wrong, and that Bitcoin will fail. Who knows? Or in my opinion, more likely, Bitcoin's use case gets absorbed by another, newer, better, faster, cheaper, more adopted cryptocurrency, which does the same thing plus some more stuff. It always seems impossible that incumbent tech could ever get replaced, until it happens, and then it seems obvious and inevitable. I'm not saying it will happen, or that it's likely to happen, just for the sake of the argument. So in the first scenario, let's say that it's 50% chance that Bitcoin will do well. Very conservative. And in the second scenario, that it gets obsolete, has 50% chance of playing out. So 50-50 for the sake of this thought exercise. Then for the first scenario, where we now assume that it does well also for the next 5 to 10 years. What is the upside? Then that's an easier question, because now we assume that scenario is happening. The scenario where most major investors invest. Well, then it will probably go up a lot. 500,000, 1 million isn't crazy if you look at this chart. I made some videos with scenario calculations for the 300k outcome, so let's take that one. If this becomes a mega success, that's still conservative. So from current prices, say 65,000, that's over 4x the money. $1 invested becomes 4. Then for the second scenario, where Bitcoin fails or gets replaced, what's the maximum downside? Well, probably close to 0. It's not going to go to exact zero because there will always be some people, but could go close. Couple of $100 maybe if it's no longer relevant in 10 years. Zero, outcome zero. So now we can calculate the expected value. So the expected value in probability theory is the probability of that scenario happening times the outcome of that scenario plus the probability of the next scenario happening times the outcome of that scenario. So probability of this one times the outcome of this one, copy down, sum it up, which is the expected value of all these scenarios. So the expected outcome of the Bitcoin bet is over 2 times the money with very conservative assumptions. If you hodl, which means that you buy and then hold either to the moon or to zero, whichever plays out. But there is a problem with this model. Your money will become at least 2x if you live the next 5 to 10 years an infinite amount of times. But you won't. You'll only live it once, probably. And if you only love Bitcoin, you now have 50% to go broke. Not good. But good news, we can arguably improve on this outcome. One way, if we assume there's 50% for it to go up bigly and 50% chance to fail, then we know that it absolutely, with mathematical certainty, must trend either up or down for quite a bit before it can reach either there or there. So we can try to identify the trend. Then we can combine it with not putting zero here, where we step out, but a much closer value to the current price. And that's what technical analysis is mostly about. For example, if you entered at any of the pretty clear entry points we had last year, or even at this one in February this year, you can put the downside exposure much less. You don't have to hold it all the way down here, or here, or here. You have a much tighter distance to what we call invalidation, where the thesis for the entry is no longer true, while you still, arguably, still have a chance to get exposure to the Larry Fink scenario, where it succeeds and reaches 300k. If we protect capital, we have at least a very good chance to avoid the zero price and perhaps retain 80 to 90% of our capital. There is still arguably a catastrophic scenario of zero, maybe with 10% probability, where it really goes to zero. So now you have both improved the expected value a little bit, and more importantly, reduced the risk of going broke by 80%, down to only 10%. This is basically one day we wake up, Bitcoin is dead, the code broke, Gary Gensler banned it, whatever. Then on top of this, there are of course more tools like position sizing, uncorrelated assets, and so on. This is what we're trying to do here. Anyone who says that they know exactly what the market will do next are either lying, probably to themselves mostly, or beginners, and most likely both. What we are trying to do here is to identify setups where the probability of an upside scenario seems reasonably big, at least possible, and the actual outcome, if it plays out, is big, while the downside, if it doesn't, is comparably small, and the risk to suddenly wake up broke gets as close to zero as possible, because we only live once, probably. So if we take a few examples of charts that you guys have talked about lately. Tau to BTC, a super clear horizontal level that flipped gold just as it broke out. So somewhere here, this was a very short distance to invalidation. The downside on this chart pretty small, maybe 15%, while the upside arguably bigger, in this case 50% from the confirmed breakout. So 3-to-1 reward to risk ratio. And if you're a fan of the project, you probably think this one has more to go. ZEUS, clear horizontal breakout, almost retest just about when Larsson line flipped gold. Either from here or from here, short distance to invalidation. ZEUS, I mentioned the setup in this chart on one of the shows. Again, clear horizontal level that broke out just as the trend flipped back up up. This maybe looks big, but it's not much. It's not even 10. It's like 7-6%. Need to have some tolerance and an upside of almost 60%. And then some that didn't play out. KASPA to BTC. Same setup as the ones that I showed before. A clear horizontal support. But it didn't hold from what it looks now. Perhaps it will climb back. Let's see. While for example SOL to USD did. Same setup. Same clear horizontal support. That support held. I talked about it many times in previous videos. Excellent risk reward at support. But did you know that this support would hold while this one wouldn't? I don't think so. And if taking some more volatile, arguably riskier projects, where the numbers here for risk and downside are for sure bigger, if you manage the downside risk instead of hodl to zero, the risk becomes far less, while you still have a chance for the upside. If you've been in altcoins for some cycles, you know that outcomes like 100x are not impossible. But the probability isn't 50%, it's maybe 10%. And it's 80% that it will slowly go and die. And it's at least 10% that you wake up and poof, it's gone, it got rug pulled. But if you calculate the expected value, it becomes over 10 with those example numbers. But if you don't have this scenario and your strategy is to hodl to zero, which has 90% probability, you have a 90% chance of going broke even though the expected value is 10 times the money. And this is what's a little bit difficult to understand, but if you think about it for a moment, you realize it's true. So if you undo that, you realize that it's better to have 80% chance to lose a little bit of money, have a small chance to make a large return, and perhaps 10% chance to go broke on that position. Don't go all in one project, because 10% chance to go broke overall is still too high. You should use position sizing and so on. Also, this isn't foolproof. It's not easy because you can get faked. And when you get faked, you lose a little bit of money and you have to buy back in, getting a small cut. That's the insurance premium to pay to not risk losing all the money. Which is fine if you do it right, but of course if there are too many insurance premiums and those premiums are too expensive, it starts adding up. Plus, I'm not the only person who has figured this out. The whole world has figured it out. So there will be people trying to actively trick you, hunting people's stop losses. Perhaps this will turn into a fake, and there's no way to know that at this point. Still, this is the better model and mindset for investing from a purely mathematical perspective, rather than trying to predict the future and then not take in new information when it goes against your mental model. I'd say almost every professional trader or investor in the world uses a variant of this model of it might go up, it might go down, and you can still win even if you are mostly wrong, because these upsides are so huge in tech. Do I think it's going to go up? Yeah, I do. The latest opportunity with good risk reward in this ranging or consolidating price action was the earliest point you could identify that this was probably a higher low, which we did. The next point would be if this level breaks, because then, ladies and gentlemen, this arguably becomes a double bottom. It's not yet, because it has to confirm first, but it's very close. The next point after that would be the breakout through this resistance, which we never got through before. And then maybe we get trending price behavior back on the menu with Larsson line in glorious gold. That would be sweet. Shop is closed. Anyone tried to sell you anything CTO Larsson or Larsson line? It's a scam. Don't send them money. I have only one website. It's ctolarsson.com. You can click here and register your email. I'll use those who have as waitlist. It is moving forward. Some company registration was done this Tuesday. I hope you learned something valuable from this video. I had a good time. Weather here is just perfect. It is so nice to sit here. That was the last of the coffee. Thank you, tack. CTO Larsson out.